Back on Morning Movers, FedEx in focus today. It's got third quarter earnings report due after the bell, after the close. Estimates for earnings are $4.65 for adjusted EPS, projecting for revenue of $21.89 billion. It's been a rough start to 2025 for the stock, with shares down double digits so far in the year. It hit 52-week lows just last week. All right, time now for Options Corner. Joining us to take a deeper look at FedEx, we've got Rick Ducat, lead market technician. All right, Rick, so I feel like we know kind of some of these trends happening here, but tell us from your point of view the trends you're paying attention to when it comes to the chart for FedEx.
Yeah, it's been a rough few months here for this company, because we can see that from this high point that we had back in December, we've fallen about 20%. So it's been a very rough decline between these two white dashed lines that make up our downward sloping channel, connecting these subsequent highs that we hit. You can see we've drifted below our three moving averages. We can also see that our moving averages are continuing to diverge farther apart from each other, which suggests the downtrend is not abating at this moment. So we established this low point, 239.50, but we also, as of yesterday, recovered over another very significant point, this series of lows from back here near about 246. So far, we've managed to retake them, but we'll have to see what happens. Certainly not a breakout or a bullish move by any means yet, Diane.
That definitely seems to be the case, and not surprised, especially given their performance, even on earnings in multiple quarters. But tell us about what kind of notable options activity you've seen in FedEx recently.
Sure. In terms of open interest, like many other stocks, this quad witching Friday is the top in terms of the open interest. For the call side, mostly the activities between about 230 to 310. Looks like there's probably a big spread here at the 220 and 225 calls that are giving us these outlier numbers. We can also see for the puts about 200 to 290 is the main areas of interest here, with once again 220 coming into focus here. It's the top for both sides here. In terms of the trading activity yesterday, there was a lot of heavy selling of deep in the money calls at the 200 strike in the June 20th and March 21st series. So someone sold about a million total of those two option series right around the same time yesterday, heading into the close. Probably closing trades, they were so deep in the money. An interesting opening trade, a $300,000 debit long strangle for January 2026. Buying the 220 puts, buying the 310 calls. Need a big move either way.
All right, need a big move either way when it comes to FedEx. That's Rick Ducat with some notable options activity. All right, time to take us through an example trade. We've got Tom White, senior options contributor and co-host of Fast Market. All right, Tom, so how would you structure an example trade for FedEx, especially in the context that we're right in front of earnings?
Yeah, and if you take a look at the last four earnings results, this stock moves on earnings, whether to the upside or the downside. It fills gaps. So typically we see big moves post earnings. Now, last quarter they reported below expectations, just slightly on EPS and revenue, and then gave a really cloudy look on guidance moving forward for the fiscal year. But what helped them is they're going to potentially spin off their freight business, which had investors buying the shares really quickly, but then the shares faded once again. So going into this report, the option market's pricing in about a plus or minus 8% move in the shares, nearly $20 either way in the stock. So I want to take advantage of that higher implied volatility in the near term. So I'm looking at a strategy here that I need a move in the shares, either one standard deviation to the upside or to the downside. And that's how I set up my strikes on this particular double calendar strategy here, where I'm going to go out to the March 28th weekly cycle that expires in 8 days, and I'm going to buy the 270 calls and I'm going to buy the 225 puts, both out of the money, one to the upside, one to the downside. And in the near term, March 21st monthly cycle that expires tomorrow at the close, we're going to sell those same strikes, the 270 call and the 225 strike put. So a double calendar position where you're covering yourself on the upside or the downside. So you don't care which way it moves. You just want it to move about that one standard deviation that the option market's pricing in, which is about plus or minus $20. Now, for this double calendar position, 4 legs, I'm paying about $1.60 debit. There's going to be your risk, $160 per spread. on this one. You can see from the profitability on this risk profile is, hey, if it goes at or near 225 or at or near 270, it's going to be profitable, right? But I've still got a range on this one between about 210 on the downside and maybe about 285 on the upside where I can still remain profitable. What I don't want to happen, Diane, is I don't want the stock to stay exactly where it is, just below 250 a share. Okay. I want it to move towards one of those strikes, and I don't want a big 2 standard deviation move where the stock moves $40 to the upside or $40 to the downside. So you want it to kind of be in a range going towards either one of those strikes. You're buying about a 63% implied volatility in the March 28th weekly options, selling about 163% implied volatility on aggregate in that near-term series. That lowers the input price or the risk on this trade, but this is the need to move strategy, Diane.
Okay. Now, I'm glad you said what you don't want to happen with this, because I was wondering, because I was like, it feels like this could work kind of any way you take it. But, given that, you don't want to see it just really kind of remain around this level, because that would impact you being able to, reach to either get the profits that you're looking for or, I guess, limit your losses. Yeah. All right. Tom, thanks a ton for that example trade on FedEx. It's got earnings due after the close today.